In the late 2010s, the electric vehicle market was practically minting money. Venture capitalists had one overarching mission: scour the earth for anyone who looked, talked, or acted like the next Elon Musk. Enter a serial entrepreneur named Trevor Milton. He recognized exactly what Wall Street wanted and launched a new EV startup. To make absolutely sure investors understood who he was trying to emulate, he named the company Nikola, borrowing the first name of the exact same inventor his main competitor was named after. Milton promised to overhaul global logistics. He pitched massive hydrogen fuel cell-powered semi-trucks that would boast infinite range and emit zero pollution, and investors eagerly bought into the narrative. By 2020, Nikola went public, and the market pushed the startup to a staggering $34 billion valuation. At that exact moment, Nikola had successfully delivered exactly 0 vehicles to actual customers. To put that number in perspective, that valuation briefly made this pre-revenue startup more valuable than the Ford Motor Company, an industrial titan with sprawling physical factories turning out millions of actual cars worldwide. Wall Street justified this price tag because they had seen proof. 2 years earlier, Nikola released a highly produced promotional video showing their flagship truck, the Nikola One, smoothly cruising down a desert highway. So how does a startup manage to convince the sharpest minds in finance to hand over billions of dollars without possessing a single working engine? The psychological environment of the late 2010s mirrored the late 90s dot-com bubble. Back then, simply putting .com in a startup's name caused venture capitalists to pour cash into totally unproven business models. Investors were buying into a feeling, an aesthetic of the future, rather than scrutinizing balance sheets. This dynamic matches the strategy successfully used by Elizabeth Holmes. She convinced heavy-hitting investors that Theranos could run hundreds of tests from a single drop of blood. When scientists asked how it actually worked, she deflected with vague claims of advanced proprietary science. Trevor Milton applied that exact playbook to the automotive sector. He went on podcasts and Twitter, confidently claiming that Nikola was already producing its own shockingly cheap hydrogen fuel. Yet anytime someone asked for specific engineering details, the answers became extremely difficult to pin down. Wall Street analysts played right along. They began projecting massive future revenues for products that had never cleared basic engineering tests. We saw this collective suspension of disbelief decades earlier with Enron, where executives booked profits on imaginary future deals. In a market terrified of missing the next massive tech boom, the phrase revolutionary science acted as an impenetrable shield against basic financial due diligence. But inside Nikola's engineering department, the reality was entirely different. That beautiful, futuristic truck in the promotional video didn't have a functioning hydrogen fuel cell. It didn't even have a motor. It was a completely hollow metal shell. This diagram shows how they filmed that video. Engineers towed the hollow prototype to a long, low-grade incline. They took their foot off the brakes and filmed it rolling down. To complete the illusion, they tilted the camera angle so the road appeared perfectly level. They managed to build a $34 billion automotive empire powered by nothing more than the basic laws of gravity. The illusion held until September of 2020. A short-selling firm called Hindenburg Research published a massive, highly detailed report directly challenging the company's technical claims. Their investigators didn't rely on complex financial modeling. They physically drove out to the exact stretch of remote highway seen in the promotional video, placed a standard carpenter's level on the pavement, and mathematically proved the road was a hill. This chart shows Nikola's stock price reacting to the news. The market reaction was instantaneous, dropping vertically and wiping out billions of dollars in paper wealth almost overnight. The panic triggered a complete collapse of confidence. Trevor Milton was forced to resign from his own company and was eventually convicted on federal fraud charges. When a pitch perfectly aligns with what investors are desperate to hear, even the most rigorous analysts will happily ignore the laws of physics just to ensure they get in on the ground floor. If you enjoyed this deep dive into corporate hubris, hit that like button, subscribe to Irony Economics, and let me know in the comments which multi-billion-dollar disaster you want me to decode next. Until then, if a CEO promises you a revolutionary vehicle, maybe check if it actually has an engine.